Hello students, we are starting with part B of class 12th accountancy, and part B consists of analysis of financial statements. So we are taking up today part B of accountancy class 12th, and part B, as I told you, is the analysis of financial statements of a company. Now, what are financial statements? The financial statements of a company simply show a summary of the financial transactions, a summary of financial accounts of a business. It is purely a summary. In a summarized form, it is presented before the shareholders and other interested parties. Now, these financial statements, they consist of number one, balance sheet, and number two, statement of profit and loss. Number three is cash flow statement. You are required to study these three: a balance sheet, statement of profit and loss, and a cash flow statement. Now, what is balance sheet? Balance sheet is prepared at the end of the year, and it shows, balance sheet shows the financial position. It shows the financial position of a company. Financial position of a company at a point of time. At a point of time. At a point of time means just on that date. Maybe it is 31st of March. Maybe it is 31st of December. At a particular point, what is the financial position? It shows the position of assets. It shows the position of its liabilities, what it owes to the others. Assets, liabilities, and what else? And capital. Position of the financial position of the company at a point of time. It shows assets, it shows liabilities, it shows an capital position. Assets are the properties of the business. Assets are something for which the business feels proud of. The more the better. Liabilities are the amounts which the business owes to others. Business owes to outsiders, and the business also owes something to the insiders. Outsiders, liabilities are to the outsiders, and this capital is the amount that business owes to the owners. So, the balance sheet shows at a particular point of time what is the value of his assets, how much money is owed to the others, and how much money it owes to the proprietors or the owners of the business, or to the shareholders in case of a company. Amount which it owes to the shareholders, right? And amount which it owes to the outsiders. and the value of its possessions, its valuable things, which may include buildings, it may include machine, plant, machinery. These are the assets. It may also include investments. It may include debtors and stock and prepaid and cash at bank and cash in hand. So these are assets. So balance sheet shows all these positions. Now this is what the balance sheet discloses at a point of time. Then it is in the form of accounting equation. Accounting equation you have studied in your 11th class. What were the elements of the accounting equation? Do you remember? The elements of accounting equation were capital plus liabilities, capital plus liabilities, they are equal to assets. So the balance sheet is prepared on the basis of this equation. Balance sheet itself actually is an equation, because on one side it shows capital and liabilities, and on the other side it shows assets. One part of the balance sheet shows capital and liabilities, the other part shows assets, and their totals are equal. Because the equation itself says that assets are equal to capital and liabilities. The business equation, the equation of an accounting equation of a business, says that its liabilities plus capital are equal to assets. Okay, the entire accounting structure is built on the basis of this equation, and we never allow this equation to be disturbed. So therefore this balance sheet is basically an accounting equation, and it is prepared in such a way through the ledger accounts that its two sides or two parts, assets and liabilities, they are equal. And then we have, in case of balance sheet, one more point, that it is only prepared, generally prepared at the year end. It is prepared at the year end and with the closing balances or year end balances. Year end balances, all balances shown in the balance sheet are the balances which are there at a particular point of time, maybe 31st of March. So on 31st of March the year ends and all the accounts are balanced, their balances are calculated and they are shown in the balance sheet. Another point about the balance sheet is that it shows only personal accounts, personal and real accounts. Balance sheet shows only personal accounts, personal like debtors, personal like creditors, personal like borrowings, long-term borrowings, they are personal. Personal like debtors, creditors, these are personal accounts. And real accounts are properties, cash in hand, buildings, furniture, machinery, they are all real accounts. Investments, real accounts. Gold, silver, real accounts. All these are shown in the balance sheet, personal and real. No nominal account, no expense account, no revenue will be entered, will be shown in the balance sheet. This is what the balance sheet shows. Now we come to the second statement, that is statement of profit and loss. The Companies Act 2013 gives a pro forma of both a balance sheet and a statement of profit and loss account in Schedule 3. So according to the same pro forma, we have the balance sheet. According to the same pro forma, we have profit and loss account. I will show you these pro formas little later. The statement of profit and loss account is a performance statement. It shows financial, not position. Financial position is shown by the balance sheet. It shows financial performance. Financial performance. It has revenues. It shows revenues, expenses, and the difference between these two is either profit or loss. If revenues are more than expenses, it is profit. If expenses exceed the revenues, it is loss. So, statement of profit and loss account, financial performance, and it covers revenues, expenses, and it shows profit. And third is, balance sheet is prepared at a point of time. This is prepared for a period of time. It is prepared for 1 year. It is a period. So, not a point of time. It is prepared for a period of time. As against point of time, remember point of time, balance sheet. Period of time, this is statement of profit and loss account. These things have to be kept in mind when you study balance sheet and statement of profit and loss account, and we are to analyze these. And unless and until you know each and every item clearly given in the balance sheet and profit and loss account, you will not be able to analyze these. So therefore, I have given you an outline both of balance sheet and statement of profit and loss account. Their detailed performance will be discussed a little later. So next is third financial statement is statement cash flow statement. Third one is cash flow statement. This is the statement of movement of cash, flow of cash, inflow of cash and outflow of cash, receipts of cash, payments of cash are shown in this statement. These inflows and outflows are shown on account of three activities. They are operating activities, and the inflow and outflow on account of operating activities. Sale is an operating activity. purchases are operating activity, paying wages are operating activity. All items that you enter in profit and loss account, they indicate operating activities, and you can understand what are the payments and what are the receipts on account of operating activities. Then we have cash inflows and outflows on account of investing activities. Investing activities are those when you buy assets, buy fixed assets, buy buildings, buy say shares or say furniture or plant. So these are investing activities, and when you sell these assets after having used them for some time, then it is again an inflow of investing nature. First it was outflow of investing nature, and now when you sell these assets, that is the inflow of investing nature. So we have inflows of cash on account of operating, inflow of cash on account of investing, and outflow of cash on account of operating and investing. Third and the last is financing activities. Financing activities relate with providing capital, getting loans, paying back the loans. These are financial activities. Paying interest on the loans, paying dividend to the shareholders. These are financing inflows and outflows. I repeat, financing inflows include issuing shares, so inflow. Financing inflows include issuing debentures, पैसा आ गया. Financing inflows includes getting loans from financial institutions. And what will be the outflow? You refund this loan, pay the money to the debenture holders, redeem the debentures, pay interest on the debentures, pay dividend to the shareholders. These are financial outflows. All activities of the business, they can be divided into three parts. All payments or receipts can be divided into three parts. Either they will be operating or investing or financing, and this statement shows how much money has come or gone on account of operating. Is there a positive operating inflow? Is there positive operating cash flow? Positive operating cash flow will indicate that lot of money has come from profits. Listen again. Operating activities, they include selling the goods and buying the goods and incurring all expenses. That means they show profit. So, operating activities, in operating activities, if inflows are more than the outflows, that means our income is more than expenses. So, cash flow statement will show how much cash has come from operating activities and how much cash has gone out from operating activities. We have the net cash inflow or outflow from operating activities. Similarly, we can find out net cash inflow or outflow from investing activities, net cash inflow or outflow from, and this is shown by the cash flow statement. This statement helps the business. What for? It helps the business in cash planning. They can think of future plans on the basis of how much cash they have right now and how much cash they require in future, so that if there is a deficit, they make a plan how to fill up that deficit. वो पैसा कहाँ से लाना है बताती है ये. Similarly, it is also helpful to the shareholders, to the other interested parties. Sometimes what happens, this statement shows, or the financial statement shows, or the balance sheet shows, or statement of profit and loss shows that the company has earned a lot of profit. सब statement यही कहती हैं profit कमाया, profit कमाया, profit कमाया. Then the shareholders are expecting dividend. But this statement does not show under financial statements any dividend paid. कुछ dividend दिया ही नहीं भाई, फिर ये क्या हुआ, प्रॉफिट कमाया तो डिविडेंड कहाँ, डिविडेंड क्यों नहीं दिया? Now this cash flow statement will show that profit was earned, but it was not paid as dividend. At the same time, this statement will show that this profit which was earned in cash, this cash has been invested in machinery, it has been invested in plant, it has been used to pay back the borrowed money. These are good indications. These are good indications, and these indications are available from cash flows. It is of immense use for the business. If in the investing activities some huge plant has been purchased worth about 25 lakhs, where from the money came? ये पैसा कहाँ से आया? This money should come, rather must come from long-term resources. 25 लाख रुपया long-term source से आना चाहिए, because if you arrange money from short-term sources, the plant will take around 1 year to be fixed and started. Plant has not started working yet. The lenders will come at your door to ask for the money back. Plant अभी शुरू नहीं हुआ और जिन्होंने आपको लोन दिया वो पैसे मांगने आ गए. So therefore the short term finance is never to be used in buying fixed assets. ये भी बात कैश फ्लोज का है कि जब हमने ये इन्वेस्ट किया प्लांट के अंदर, वो पैसा कहाँ से आया था, वो पैसा आना चाहिए हमें या तो लॉन्ग टर्म रिसोर्सेज से, यहाँ से पता लगेगा हमें. बोरो किया था, शेयर कैपिटल इशू किया, गुड. डिवेंचर इशू किया, गुड किया. और अगर यहाँ से नहीं लिया तो हमने प्रॉफिट कमाया होगा, प्रॉफिट से हमारा पैसा आया. Very useful information is provided by cash flow statement. The more about it you will study in the chapter 5 of this syllabus, this book, where the entire cash flow statement is discussed in detail. So at this point only this much is sufficient for you. So we have a balance sheet which shows financial position. We have a statement of profit and loss account which shows the performance, financial performance of the company, and we have cash flow statement which shows the inflows and outflows of cash on account of operating activities, on account of investing activities, and also on account of financial activities. Now we come to a detailed study of the balance sheet. Here is balance sheet, my dear students, before you. The balance sheet is here. Here is the balance sheet. This is the balance sheet of the company. Equity, first is equity and liabilities. The balance sheet of a company has got two parts. Part 1 is equity and liabilities. Part 2, the assets. Part 1 is equity and liabilities. Part 2 is an assets. The balance sheet is prepared according to the Companies Act 2013, and the two parts are shown vertically. Equity and liabilities are shown first and assets are shown later on. There are four sub parts of equity and liabilities. One is shareholders funds, then is share application money pending allotment, then is non-current liabilities, then is current liabilities. Four sub parts of non-current liabilities. They are long-term borrowings, deferred tax liabilities net. other long-term liabilities, long-term provision. Similarly, we have current liabilities, short-term borrowings, trade payables, other current liabilities, and short-term provisions. So this is the first part. First part is, I repeat, equity and liabilities. Equity and liabilities. Equity means basically the share capital, and liabilities are to the outsiders. Point number 3 and 4 are liabilities. Point number 3 and 4 or subpart 3 and 4 are liabilities, non-current and current. And part 1 and 2, see, first is shareholder funds. This money is share application pending allotment. I'll explain it in a moment to you. So first of all, we take shareholder funds, and in shareholder funds we have share capital. We have share capital. We take this share capital is shown in the balance sheet. Share capital is shown in the balance sheet at subheading of the major heading. This is the main heading, this is the subheading, shareholders funds. Shareholders funds are 1, 2, 3. 1, 2, 3, all these three, they constitute shareholders funds. And capital, share capital is of 5 types. First is authorized capital. Authorized share capital. Second is issued share capital. Third is subscribed share capital. Fourth is called up share capital, and fifth is paid up share capital. These are 5 types of share capital, and this is an information for you to describe the 5 types of share capital. First is the authorized share capital. It is mentioned in the memorandum of association of the company under capital clause. Clearly mentioned that the company is authorized to issue 20 lakh shares of 10 rupees each. 20 lakh shares of 10 rupees each. This is the authorized capital. The company cannot issue more than this. But it has the option, it is at liberty to issue less than this. It issues only that number of shares which it needs. If it needs less money, it will issue less number of shares. It may issue only 2 lakh shares of 10 rupees each because it needs only 20 lakhs. It may issue 20 lakh shares of 10 rupees each, fine. According to its requirements, it issues the shares. The first one is given in the memorandum of association, and the company cannot issue more than this amount which is given in the memorandum of association under capital clause. There are many clauses in the memorandum of association. One of those clauses is capital clause, and the amount given in the capital clause is the authorized capital. Issued capital, as I told you, the company issues according to its requirements. It may issue the entire authorized capital in one go, and it may issue less than that. So whatever the number of shares are issued, must not cross the number of shares given in the authorized capital. Okay? So therefore, issued share capital consists of the number of shares which the company now wishes to issue to the public. And subscribed, this was from the company's point of view. The company wanted to issue 10,000 shares of rupees 10, and they issued 10,000 shares. They have done their job. 10,000 शेयर इशू कर दिए. इशू कैसे कर दिए? They issued a prospectus. They called the people, look here shareholders, future shareholders, aspirant shareholders, come on, apply for this issue of shares. Now it is for the public to decide whether they want to apply or not. If the public thinks that yes, the company is very good, the persons who are running the company, the management, they are very reliable people, they have good standing, they have a high rating of goodwill, people will come in large number to apply for the share. So if they apply for the entire lot of 10,000 shares, we will say it is fully subscribed. People may apply more than 10,000, but the company cannot issue more than 10,000 shares. It will issue only 10,000 because it has advertised and issued prospectus for 10,000 shares. Okay? So, subscribed share capital is the shareholders may apply for 10,000. We will say fully subscribed. The shareholders may apply for only 8,000 shares. Shareholders have subscribed only for 8,000 shares. They are not happy with the management. They are doubtful about the intention of the company. Therefore, this will be the subscribed capital. So, authorized capital given in the memorandum of association, issued capital, the number of shares out of the maximum limit issued by the company, subscribed, it is from the shareholder, from the public point of view, how many shares the public applies for. You cannot force people, भाई जरूर apply करो, उनका नहीं मूड है, नहीं करते, they are not happy, so they will apply less. Okay, so that is subscribed. So once this is done, 8,000 शेयर की application आ गई, 8,000 shares are subscribed. Each is of 10 rupees. So if the company gets the entire money, the company will get how much? It will get 80,000 rupees. The company will get 80,000 rupees. Got the point? But these 10 rupees are further divided into installments. One is application money, then there is allotment money, then there is a call money. Call may be first call, or there may be two calls, first call, second call, third call, final call. So let us say application money was 4 rupees, allotment money was 4 rupees, and call money was 2 rupees. All these people, सबने 4 रुपए भी दिए, सबने ये 4 रुपए भी दिए, they have paid 8 rupees, but they will pay only when the company calls them to pay. एप्लीकेशन के साथ तो पैसा एप्लीकेशन के साथ जाएगा एप्लीकेशन मनी का, but allotment money will be paid only when the company calls them to pay. First call will be paid only when the company calls them to pay. अब कंपनी ने ये 2 रुपए की चिट्ठी नहीं डाली, the company has not called 2 rupees, so shareholders will not pay 2 rupees. Therefore we have fourth type of capital which will be 8,000 shares. ऐसे लिखते हैं इसको, 8,000 shares each of rupees 10. ठीक है, इसमें rupees 8 called up, rupees 8 called up. दिस लेटर हैज़ नॉट गॉन, 2 रुपीज़ का लेटर अभी गया नहीं है, और therefore this will be 8 called up. So called up will be 8 into 8,000. This will be 64,000. 8 into 8,000. Whereas subscribed कितना है? 8,000 each of rupees 10. ये कितना हो जाएगा? This will be 1 lakh. देखो दोनों डिफरेंस आया जा रहा है. इशूड कितना है? इशूड इज दिस विल बी 80,000. इतना ले रहे हैं हमने, ये सब्सक्राइब हुआ. 8,000 into 10, this is 80,000. Issued was 10,000 of rupees 10 each. So this is 1 lakh. Or in the memorandum of association, it is given that the company can issue 2 lakh shares. Company can issue 2 lakh shares of rupees 10. That means this is 20 lakhs. 20 lakhs. Look here, or be clear.